Today, we're going to talk about something that might just change the way you think about success. It's a powerful idea called Tails You Win, and it explains why in so many parts of life, from business to investing, a few massive wins drive pretty much everything. Let's jump in.
All right, to get us started, here's a little riddle for you. What on earth could a classic animated movie from the 1930s possibly have in common with a modern tech giant like Amazon Web Services? I know, they seem like they're from different planets, but they're actually perfect examples of the exact same powerful force at work.
And to answer that, we've got to go back in time and talk about Walt Disney. Before he was a household name, before the theme parks and the massive media empire, he was an entrepreneur who was, believe it or not, right on the edge of total failure. Now here's the crazy part. Disney wasn't failing for a lack of creativity or hard work. The studio had already gone bankrupt once before. And even though people absolutely loved his short cartoons, they were just bleeding money. He made hundreds of them, a huge creative output, but they just weren't paying the bills.
And then Snow White and the Seven Dwarfs happened. In just his first 6 months, back in 1938, the film brought in $8 million. Now you have to understand, that amount of money back then was just astronomical. It wasn't just a hit movie, it was a statistical explosion, a total anomaly.
And that's the whole point, right? That one single film, just 83 minutes long, was more important than all the hundreds of hours of cartoons that came before it combined. It was what we call a tail event. That one win paid off all the company's debt, financed a brand new studio, and basically secured Disney's future. It was everything.
So this incredible Disney story is the perfect setup for the big idea we're digging into today. We're talking about the power of long tails.
Okay, so what the heck is a long tail? Well, think of it like this. In almost anything you do, most of your efforts are going to get you pretty average, kind of predictable results, right? But every once in a while, a rare, super unlikely event happens that produces an absolutely extraordinary result. That's the tail. And these tails have a ridiculously huge impact on the final outcome, just like Snow White did for Disney.
And look, this isn't just some weird thing that only happens in Hollywood. You see this pattern everywhere. Take the world of fine art, for example. Let's talk about this one collector, a guy named Heinz Berggruen, who built his entire strategy around this idea.
Berggruen's game plan was brilliant in its simplicity. He basically treated art collecting like an index fund. He bought tons and tons of art, just massive quantities. And here's the key part. He went in fully expecting that 99% of it would end up being pretty much worthless. And he knew it didn't matter, because that tiny 1%, that's where he'd find the masterpieces by Picasso or Matisse that would make his fortune. This is the long tail mindset in a nutshell. You can be wrong most of the time and still end up stupendously right.
Now, I know these are great stories, but you might be thinking, okay, but are these just flukes? The answer is no. The data is crystal clear on this. This is a fundamental rule of how business and finance actually work.
Let's just look at venture capital for a second. This is where people invest in risky new startups. A study looked at over 21,000 of these investments, and what it found is kind of shocking. A whopping 65% of them lost money, just gone. Most of the rest made only modest gains. But look at that tiny, tiny sliver. Just half of 1% of these companies. They delivered returns of 50x or more. That tiny group, the tail, drove almost all of the industry's profits.
And it's the exact same story in the public stock market. You might think these bigger, more established companies are safer, right? Well, get this, 40% of all the companies in the Russell 3000 index basically failed. They lost most of their value and never came back. Meanwhile, a tiny 7% of superstar companies were responsible for nearly all of the index's incredible growth. It's always the tails. They drive everything.
So, okay, this is the big question. We see this pattern everywhere. What does this mean for us? How can we actually apply this idea to how we work and live?
Well, first things first, you have to be willing to fail. I love this quote from Jeff Bezos. You remember Amazon's Fire Phone? It was this massive public flop, but he sees it as just the cost of doing business. Because for every monster home run like Amazon Web Services, a true tail event, you have to accept some big misses along the way.
This quote from Reed Hastings, the CEO of Netflix, is even more telling. He actually said that having too many hit shows was a bad sign. A bad sign! Why? Because it told him they weren't taking enough big, bold risks to find the next culture-defining billion-dollar hit. A really high success rate might just mean your ambitions are too small. So yeah, taking big swings is crucial, but it's only half the equation. The other half is endurance.
You have to stick around long enough for those rare tail events to even have a chance to happen. To see just how important this is, let's look at a little hypothetical investment scenario.
Okay, so on this chart we've got 3 investors. Jim and Tom tried to be clever, right? They tried to time the market, jumping in and out to avoid the recessions. But Sue's strategy was way simpler. She just stayed invested. She rode out every boom and every bust. And by simply enduring all that volatility, she ended up with nearly twice as much money as the guys who tried to be geniuses.
And that really gets to the heart of it. You know, a true genius in this game isn't always about complex strategies. It's about having the emotional resilience to do the simple, average thing, like just staying invested, when everyone else around you is completely panicking.
We have to let go of this idea that being successful means being right all the time. It's just not true. The legendary investor Peter Lynch said that being right 60% of the time is a terrific record. And Warren Buffett, arguably the greatest investor of all time, made the vast majority of his incredible fortune from just about 10 stocks out of the 500 or so he's owned.
And this right here is the ultimate lesson of long tails. It's not about the frequency of your wins and losses. What truly matters is the magnitude. It's about how much you make when you're right versus how much you lose when you're wrong. One spectacular win can completely erase 100 small failures.
So this tails you win principle, it really changes everything. It tells us to embrace failure, to take bigger risks, and to have the patience to see them through. Because you can be wrong most of the time and still achieve extraordinary success. So the only question left is, where will you take your next big swing?